Well, good evening, ladies and gentlemen, and thank you for being with me today. It's lovely to have you here, and I apologise that we're a minute or two late today, but nonetheless we're here. Well, what a wonderful few days trading. I wanted to teach you about how to survive in the danger zone, and with today's trading, we've seen a whole lot of danger, and it's been coming for a while, and probably more to come. Here's Greg. Oh, he's been in Colorado 5 weeks. Came back to Texas Saturday, 105-degree heat. Have I thought about a visit to the US? Yes, I'd love to. I'm well and truly overdue. Any of you who would like to have a live tutorial, do let me know, jneedham@thedanielcode.com. And if we can get a reasonable number of people together, I'll be happy to do that, and maybe more than one. So I look forward to seeing you, Greg. You know that. Anyway, here we are, trading in the danger zone. Couldn't have come at a better time with lots of examples today. So let's move on and see what we've got in store. Here we are. Let's see, this is all going to work properly. And yes, the pages are turning as well. So I assume you can hear me. I assume the volume's okay. And as well as that, we've actually got a functioning show where the pages are going to change. So that's great. Well, as you know, markets are rational, orderly, and sometimes predictable. And if you haven't already, folks, I do urge you to read my latest article. It's on the website, and it's called The Other Way, The Greatest Secret Never Told. So if you haven't had a chance to read that, do go ahead. It's a very different way of looking at financial markets, the S&P in particular. And what I've done is I've taken the whole S&P from the 1970s up to date, and shown you what's actually happening in those markets, which is something that you won't see otherwise. It's a completely different way of looking at markets. So that's the idea there. Okay, so everybody happy? You can hear me? Let's see who we've got here today. Everyone's here. All the usual attendees are wonderful people. Here we are. Oh, yes, of course, Mark, the first one I saw, Anthony, down in New South Wales. Good to see you, Anthony. Bianca's with us. Bianca's a new client, and she's about to do a tutorial next week, I'm sure. And she's a lady from Canada, but she's actually living in Australia at the moment. So welcome, Bianca. We don't get many ladies for some reason, but we always give them a special welcome when we do have them. Colin's with us. He's just gone back to university. He's doing a tutorial with his dad. George is with us. Lots of Georges. Let's see who else. A few of you coming in a bit late, so maybe just as well I started a bit late. And here we are. Yep. Greg, yes, good to have you here. Of course, mate. Gig, good to have you from North Carolina, our golfing friend. Greg from Colorado and Texas. He's a wealth fund manager, as is Greg Palladini from California, who's with us. And he's been a wonderful help to all of our clients here. Okay. And Harold from Redding, California. The system is working today, Harold. The pages are changing, which is good news, isn't it? Kevin, he's the tutorial guy from California. Mark L., of course, he's a long-standing member. Missio, good to have you with us. Nathan, of course. Partho, my friend, doing a tutorial at the moment. Peter Mack, who's not a day trader. Phil's, to those. Sean's. What's happened here is there's another disaster. No, it's just testing us, guys. And Stuart's with us. Sean Rourke down in Adelaide. Grand to have you with us. Phil as well. All our usual guys, and a few new ones as well. Glad to have you with us, and we're delighted to have Vicky with us and Vicky is a regular. Delightful to have a lady with us. Vicky, you're very welcome. Okay, so Anthony D from Chicago. He's been with us for years and years, Ant, haven't you, mate? And I'm so glad to have you here today as we go along and talk a bit about what can happen to you in the danger zone, the bad stuff. If you understand how to trade, none of that is going to worry you. I tell you this absolutely sincerely. You may not believe it, but markets are your friend. They exist to give you health, wealth, and happiness. They really do. And once you understand how to trade, the enjoyment you get from successful trades is enormous, and it just keeps you buzzing all the time. And that's what learning to trade is all about. And I've said here you can see trained or untrained. And with a lot of you guys, it reminds me of years ago when my children were young. You always think your children are young, but they do grow up. When they were very young and started at school and doing exams, of course, like all kids, they had a bit of anxiety about it. And very early on, I explained to them that there are just two states to take exams. You are either trained or you're untrained. You either know the stuff, in which case exams are a delight to show off how much you know, earn the praise of your teachers, professors, etc., or you're untrained, which means you're going to be constantly battling with uncertainty, with doubts. And that's a situation that most people have all their lives, and you shouldn't. It really is that simple, trained or untrained. And the system must have worked all right, because my son, John, he has 2 university degrees. He has a Bachelor of Film and Television from Bond University and a Bachelor of Psychology from Southern Cross University here on the Gold Coast. Now, there are a couple of different approaches. It shows you he's a man with a broad mind. My daughter Bodhi, she has also a Bachelor of Psychology. These days they call it a Bachelor of Psychological Science. And then she did another year and got first-class honours in that, and then she did her PhD. So she became, the PhD is the Bachelor of Philosophy, which is the highest university degree you can get. And once you have a PhD, the honorific is you are entitled to be addressed as doctor. So while Bodhi was doing her PhD at Bond University, she was also lecturing and did extremely well, very popular. She's just got a bit of a gift for it. And all of that was so wonderful. And when she got her PhD, I said, well, that was what you've been waiting for. Now you'll become a professor at Bond, and you'll have a wonderful life being a university lecturer. It's a beautiful university, absolutely gorgeous place to be working, or even to visit. And I thought, well, that's good. I've got one off my hands at least. Well, it didn't quite work that way. She said, no, Dad, I've decided I don't want to be an academic. I want to do medicine. Can't believe it, can you? I mean, this is after she'd got 3 university degrees. I want to do medicine. I said, you sure you want to go back from being a lecturer to being a first-year fresher, a pleb? Oh, yes, that'll be fine. Anyway, long story short, she does her final med exams at Notre Dame University, which you'll know in America, and she does her final med exams in 2 months' time. So she is actually then going to be doctor, as my wife puts it, which is very interesting. But the system works. It's trained or untrained, and there's nothing in between. And I have to tell you, with the greatest humility, I thought that being an attorney, I thought you could learn trading in the same way you learn the law. Some books, some lectures, some practical experience. And regrettably, the answer is you can't. and I've tried. And I tried for a long time at great expense, went everywhere doing these various courses. None of them, I'm sure they all work for their own proprietors, but none of them worked well enough for what I was looking for, which was a steadily lifting equity curve. And that's what forced me to go and spend years and years in search of the Danielcode. And once you've got it and you're trained, trading is a delight. The way I've set it up, there's no maybes. It's a yes-no equation. Everything to do with trading is a light switch solution. The signal is either on or it's not on. If it's on, you will know exactly the place to put your order where it will become active. You will know exactly where to put your protective stop. It's that simple. Trained or untrained. Trained means peace of mind, happiness and money, and enjoying your life as a trader. Untrained is a constant struggle. And I just tell you, you have a few days, you can get a discounted Danielcode tutorial with me in the next few days. Now, we'll come to that in a moment, but let's talk about turns again. I'm always talking about turns because all trends start and end with a turn. So you have to be very cognizant of turns. You should be in love with turns. I am, and of course that's the level where ranges will very often increase, as will volatility as the bars get bigger, and there's much more opportunity for carnage and people getting whacked during the turning process, and that's good for us because we have very set and definite rules about it. And one of them, of course, is target recognition, which I've talked about to you at length. So how good is this trading system that I'm talking to you about, the Danielcode? I believe it to be the best trading system of its type. I've certainly never seen anything better. And different trading systems have different parameters that they were designed for. And these are the parameters I've designed it for. It creates separate price and time signals. We are in the market almost all the time. The charts themselves create the signals. And from there on, it's trade technique, which shows us exactly where to enter and the initial protective stop. You're not guessing about it. It tells you, the Danielcode website tells you exactly the number, where to put your order, exactly where to put your initial stop. From then on, trade technique manages the trade. And I'm going to show you a pretty fair chunk of that today. Risk on the Danielcode trading method is tightly controlled and should never be more than 1 ATR or average trading range. And why that is, if you think about it, every time you take a trade, if you're using daily bars as we do, your risk is really the length of the bar. You're buying one end with your protective stop or even a stop and reverse at the other end. And the system makes money, lots and lots of money over time. So you want to make sure that your risk is always going to be relatively consistent. And on market, it's not. We go from smaller bars, some volatility comes in, the bars get bigger. Sometimes they get very much bigger. And you need to understand when that happens that all you're going to risk, you're never going to risk more. I shouldn't say never. I can say you're never going to risk more than 1.5 ATR, but you're rarely going to risk more than 1 ATR. And remember, trading is about probabilities. Everything we do is about probabilities. Some of those probabilities get very high indeed, but they're still probabilities. So let's have a look at a few charts. You can see here, this is Euro USD Forex chart. And you can see from the little graph at the bottom, I put on the study for the average true range, and I've cut it right down to 3 bars to show you how it oscillates up and down. And if you have a quick snapshot, look where the peaks of the true range are, and you'll see that they follow pretty carefully the highs and lows of this market. And that's because it's a known fact that markets expand the range, the daily range, expands around highs and lows, and you can see that here, and it's quite graphic actually. So let's have a look at another one. This is silver. Same thing. Have a look at these average true range. If you're ever going to use this tool of an average true range, I suggest that you use it on a 29-day moving average. You can use any number you like. The default setting from Danielcode is 7, from Trade Navigator, I should say, is 7. I consider that too short. We want to be aware of the expansion and contraction of these daily bars, but we don't want to be slavish adherents to it. So I don't want to be trading something that's a 7-day average, apart from the fact that it should be 6, but realistically I want a much longer time cycle. 29 is what I recommend to you, 29 days, and that smooths out a lot of the extremes. But it's quite obvious here. You can see that when we get these extremes of range, daily range, on a short time cycle, and I've made it short to amplify the point, you get turns, and that's what happens. That at turns, daily ranges expand, and as daily ranges expand, volatility expands. And around the turns, with expanding ranges, expanding volatility, that's what we call the Danielcode danger zone. And that danger zone is there. You can see, as usual, let me tell you, for those who are new to us, that I do these webinars at from 3 a.m. in the morning, and sometimes the end of day data hasn't formed. Of course it doesn't, it's got hours to trade before then. So on this chart you can see this is crude oil, and you can see that the last bar is in fact Wednesday's bar, but we had a TO3 signal for today, which was elected today. As you'll see later charts, I think that's picked up. So markets have very well established patterns. We know what they do, and the great thing is that they do the same thing all the time. And markets have about 5 patterns that they use all the time, and one of those patterns that they're doing is running up and down the Danielcode price ratios here. As you can see, I've just got a few of them on. This is not the computer that runs the daily charts, but it has got a few numbers on it, and you can see how this market's reacting to them. But what I really want to point out to you is what's happening around the bars, where we have a TO3 or a TO3 plus, or perhaps even a blue line signal. And I've put a little red rectangle around all of the bars where we had an active signal, and we can have a look now at just exactly what we need to do to be able to trade that successfully. And you can. In fact, we do it all the time. Let's move on then. Here we are. So this is what a properly trained trader does. This is the same chart. This is crude oil. It starts way down in the boonies with a TO3 plus signal, which you bought, made 5,300 up to the first correction, got that correction from a TO3 signal, made 1,100 going down, linked back up to the continuation signal, made another 4,600 going up, then made 1,100 going down the next correction, and finally up into today's signal was 1,100 again, and we're short this market, and you can see how simple this is. I mean, this is just a chart that people seem to have had a lot of difficulty with, but it's just so simple, so straightforward, once you understand how to handle these trade signals. So let me show you. The first one is called SlipMe. And it's called SlipMe because all of our trade signals, whenever we're creating a trade signal, whether it's a price signal or it's a time signal, the assumption is that the market is in balance. that is that buyers and sellers are in balance. Well, the reality is they hardly ever are. And what you've had here, we've bought this and been long since the low bar there, and with the power in this trend, with this movement in the trend, we've created two bars that had TO3 or TO3 plus trade signals on them. So the market was in balance enough to give us those signals. You might notice, as a matter of interest, both of them have got the close less than the open. The first one's a bit hard to see. It's a few ticks less than the open, I think. Or it might be exactly at the open. The second one's easier to see. The close is below the open. In fact, that's a KRB. That's a key reversal bar, a selling key reversal bar. For those of you who are new to us, the definition of a key reversal bar: the bar opens within the range of the previous bar, makes a new high for the move, then reverses and closes below its own open and below the previous day's close. And they tend to be indicators. They tend to be trend indicators. The other one of those, you'll find that was a selling KRB that was not elected. We'll find a buying KRB in here pretty simply, pretty quickly. Let's see. These are just inside bars. That's an inside bar. Doesn't quite get there for us. What about this one? No, not quite. This is a buying KRB here. So this is a bar that's opened within the range of the previous bar, made a new low for the move, then reverses and closes above its own open and above the previous day's close. If it's got those qualities or conditions, then it's a key reversal bar. This is a buying key reversal bar, and you can find them on Trade Navigator quite simply under the studies link, and it's useful to have those on your charts. I usually do. So here we have these two SlipMe trades, which we assume, or the machine, part of which is me and part of which is the computers, assumes that the market is in balance when it creates these signals. And if it were truly in balance, the signal would be elected. In this case, the market's not in balance. And what happens is that you create these sell signals, and the market's in an uptrend, and a new power comes in. This is the larger power of the trend that pushes this market further along. And you can see here at both these SlipMe points, we call them SlipMe because they just slip past if you don't look at them closely. They're points where you can re-enter the market. They're also points where, if you're an aggressive trader, you can take an additional contract and load up with a pretty high degree of confidence. So they're called SlipMe. They're literally the TO3 or the TO3 plus signal that doesn't get elected. The market continues in its existing trend. That's an opportunity to buy or take an additional position in the market, or if you're already long, as we've been since the low, it cheers you along and makes you feel really happy that you're long. So that's called SlipMe, because it'll slip past without you even thinking about it if you're not looking for it. Here's the next thing. This one is called ClipMe. And what we're doing here is we've got in two places, we've got Danielcode TO3 or TO3 plus sell signals which get elected. And remember, we're always about the trend. Our job is to be always in the market, always with the trend, always controlling risk. They're the three big always. In this case, we know that the trend is up. There are various ways of telling. In this case, it's pretty obvious once it's been running for a while. But in fact, we got a signal that the trend was up from the first bar that elected the buy trade right down at the low of 28th June when we got long this market. So what you have here is you have a TO3 or a TO3 plus, you have a signal against the apparent trend. I'll get back to you, Kevin. Mate, that's a trade against the apparent trend. And what we do when you take a trade against the apparent trend, the probabilities are it's going to fail. In fact, counter trends fail much more often than statistically they should. So when you've got a trade against the current trend, the simple thing to do is to exit FPC, which stands for First Profitable Close. If you're not sitting there looking at your computer at the close, then you can exit at the First Profitable Open. They are generally much the same thing. But if you're against the trend, it becomes ClipMe. ClipMe, cut it short, take your profit, say thank you. You will know if you've done a tutorial exactly how to re-enter and how easy it is to re-enter the market. So don't fret about it. You can get back in if you think that the actual turn has been made, and where there are indicators that we have which will tell you if that is a valid turn, or if the probabilities are that it's a counter trend, which it is in both of these instances here. So the first one was quite simple. You're against the apparent trend, take your profit, say thank you. Here's the second one that's higher up the chart. Same thing, it's a big bar down. Could have led to a lot of impressions that you may even have had a probable change of trend there. There are ways of looking at that bar that would suggest you did have a probable change of trend. For me, I follow the mantra, slip me, clip me, flip me. If I'm against the apparent trend, I'm out at the first profitable close, which works pretty nicely for these two instances here. The very next bar, which was a key reversal bar, no, it was an inside bar. It looked a bit like a KRB. I might need new glasses. It's an inside bar that had a Danielcode buy signal on it. So you had to buy that, and off it went up and up and up. So there's two of the techniques for handling movements, turns in the danger zone. And here's your third one coming up now. This is FlipMe. FlipMe is a tool that gets you back with the apparent trend. And how it works is that you can see there's two instances only of it here, is that you have a TO3 or a TO3 plus signal, or even a blue line trade that is elected and you're with the trade. But what happens is it doesn't go terribly far, and you'll finish up on the wrong side of the trade. Let me just show you. I'll get an icon over here, a spotlight. Do excuse me. So have a look at this. This bar right here. I've got the red blob right on top of the bar. That gives you the sell. There's a sell signal on that bar, which just elected the next day, but there's no profitable close, so there was no exit. Now you've got your first profitable close. It's fine to exit. As well as that, you want to be counting these bars. So this bar that was the first bar on which the short trade, the TO3 plus signal was elected. In fact, the TO3 signal, it was only just elected, but it was elected. So that's the bar on which it's elected. From there, start counting your bars, only counting bars that are not inside bars. Ignore inside bars. For the most part, inside bars are what we call a null or a void. Sometimes they're not. They're sometimes telling us something about time. But simply enough, this is the trade, the bar on which the trade was elected. Now start counting. This is bar number 1. Ignore the inside bar. This is bar number 2. Ignore the inside bar. This is bar number 3, which has got the FlipMe signal on it. And what's happened, all of these trades, the signals are so powerful that your sell trade here had a failure point. And the failure point was 2 ticks above the setup bar. And they're so powerful that if that failure point is hit within 3 bars, not counting inside bars, it's telling you you're wrong. And if you're wrong, you need to do something about it. You need to get right. And that means that if you were short, you will have been stopped out anyway, but if not, you're going to do a stop and reverse and get long. The same thing happened here. Here's your sell order. This is the last part had a TO3 signal on it. Next day, the trade is elected. Down it goes. Start your count from that. You're going to exit that because it's against the apparent trend, but start your count not counting inside bars. Next bar is an inside bar. Next bar is an ups bar. Now, the high of the bar that triggered the sell signal was 82.22. If that's taken out, 82.23, or if you're like me, you use a 2-tick buffer, 82.24, that is telling you you're wrong and you need to do something about it. And what you need to do about it is you need to get long. Okay, and that's a FlipMe. And it's a very, very powerful tool. The failure point for the FlipMe, of course, is the swing low. So the after the very next bar, you get the bar on, I guess it's maybe Tuesday, is it? It runs down, it's a key reversal bar, it runs down, finds support and rallies all the way back up. That is FlipMe. So they're the three methods you need to be aware of. This is recorded, of course, so you can go through this part of the webinar as often as you like. Just make sure you burn that into your brains. The three methods of dealing with trades in the danger zone: SlipMe, ClipMe, and FlipMe. They're all very straightforward. Once you understand them, burn them into your brain because it will be of great use to you. Okay, here we are. Let's move on. Excuse me. This is the part that was FlipMe. We've just looked at that. Count 1, 2, 3. And let's move on. Look what's happened here. This is New Zealand US dollar, which has been having a fight. Now, these markets have all been having a fight. It's a wonderful thing to look at, and I'll show you a couple more as we move on. But these markets are really having a battle. The bulls are trying to push them up. Most of the central banks are trying to push them down the way this chart is positioned. But we talked a minute ago about your risk being never more or very rarely more than the ATR, the average true range, which in this market, this is the Kiwi, about $700. So we can use different techniques for our trading. We know here that the trend was down, and then we had a buy signal, which was elected today. And that was a trade against the apparent trend. We know that trades against the apparent trend fail, and we know that they fail more often than statistically they should. So what we do, one of the techniques, is we'll use a trailing stop. And the trailing stop moves up with the market. Trade is elected, the market's going up, 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 and it gets to a point that it can't go any higher and it reverses. But the trailing stop doesn't reverse. It's locked at whatever you set it to. I suggest 50% ATR, about $350. It's locked $350 from the top of that bar. When it comes down to $350 from the top of that bar, you're stopped out. But it went up 230 in the meantime. So once you're stopped out 350 from the high, you've actually only lost about $120. Okay, pretty clever stuff, isn't it? And then as it takes out the low, now this inside bar, if you've done a tutorial, guys, you know how to trade inside bars. If you haven't done a tutorial, I suggest you're very, very cautious about trading inside bars. And often I will say to newish traders, trade the last bar that was not itself an inside bar. The inside bars can get you into all sorts of trouble. Here it's pretty straightforward to you tutorial guys. You got stopped out on the buy and you got short at the bottom of that inside bar and made 250. So you finished up, you've actually had a profitable trade and you're still in it short today. Okay, let's have a look at some time signals. I wanted to show you a whole lot of time signals today. Once I started to put them on the chart, I realized that there's so many, I'm going to have to take a separate webinar to do justice to them all and to make it clear to you what I'm talking about and showing you. But what I've done here is just show you a chart of natural gas and two things here to really be aware of. You can see that there's a blue line that goes around the bars. There's a blue line above the highs of the bars and it follows along the lows of the bars. And that's a 12-cycle bar. Why is it there? Because the vibration of all markets, the Danielcode version or lexicon is 6. 6 days is the vibration for all markets. And you can read a previous webinar this year that says something about correcting Gann. The great W.D. Gann would say, if you are worthy, I will tell you the number, and if you spent enough money for him to consider you worthy, he would tell you the number is 7, which it's not. It's a mathematical certainty that it's not. The mathematics tells you that the vibration for all markets is 6.21 days. So what we are doing here is we're showing you just some of the major time cycles. 44, 59, 62, and 70 are the major time cycles, and we have a tool that just clips those on for you. If you are a subscriber to the Danielcode website Pro package, you get the charting tool that creates the price levels and the time tool that shows you the time signals. So what we've done here pretty simply is we've just gone to two prominent features. The first one is actually a swing low there, and there's a reason for it which escapes me for the moment, and it creates those first set of signals. You can see the 44 got the low of that run up on natural gas, and from the next one, which is a high before the high, look at it, say what happened. The same signal, 44, hit the high exactly, and we got a big reversal today. That's exactly what I've been teaching you in the previous webinars about time cycles. The easiest way to find a time cycle is see one that's happened and look for it to repeat. I know the great experts say that time doesn't repeat, that price doesn't repeat, nothing repeats, it rhymes. Well, those guys are obviously not futures traders because time repeats all the time. It's the most common thing that time does, is it repeats. So the other thing I want to show you guys is just a little bit of a trick for you to think of. When a market exhausts up into the blue line high, here's one of them right here. If you can see it, otherwise I'll get the tool, just bear with me. Here we are, here's our spotlight. This is one of them right here. This is the biggest bar in this whole swing up. And it stops at the blue line, and its close is pretty close to the extreme of the bar. This is the same thing on the next little swing, and right here, this bar was the same thing, and it hit the blue line, closed somewhere near the high, and the next day it did exactly the same here with another massive big bar. So those of you who follow the success system know that yesterday I told you it was valid to exit if you wanted to. Now, whenever you see that code VTE, valid to exit, doesn't mean you can, if you like, just grab the money and say thank you and wait for the next signal, because you'll know how to get back into the market. But a different solution is to just tighten up your stops a bit. In other words, I tell Colin, go and get a big piece of sticky tape, learn to write backwards like Leonardo, the great scientist who painted the Mona Lisa, but invented some amazing inventions, including a helicopter, thousands of years before anyone had ever thought of a helicopter. His theory was he always wrote backwards in script because he was worried that people were stealing his notes all the time. But if you can learn to write backwards, go and get a big piece of sticky plaster about 4 inches wide, and writing backwards, type on it NFI. N stands for no, I stands for idea, and the F can be anything you want to. But the point of it is you do not know what the market is going to do tomorrow. If you make a decision that's terminal, like I'm going to take my profits and run, you're assuming that you know that the market's not going to go any higher. And the probabilities are at least 50-50 that it may. So a better technique is just to put on a tighter stop or even a trailing stop. Even a trailing stop at 1 ATR is pretty nice, or you can make that even smaller if you're concerned about protecting profits, which is always important. So look for that pattern, the biggest bar in the swing, exhausting at the blue outside blue line with its close near the terminus, and that's valid to exit or get some protection for the trade, because that is a common place for trades to fail. Okay, so we've got that, and let's move on. Here we are. I've shown you this was the 2 time signals. Let's go to this. This is this exhausting issue. You can see it in more detail here. It was pretty important to understand this because one side of the trade was 3,900, and if you didn't take some profits up somewhere near that high, which was on a time cycle, then today you were stopped out at the low of that bar, which you left $2,000 on the table. So this is part of trade technique, which I teach you, and it's important to know this stuff to protect your hard-won profits. This is the start of half cycles, and I wanted to show you the difference between full cycles and half-time cycles, because if we want to stay in longer, and particularly if you want to stay in through the first correction, which gives you some pretty good trading opportunities, you need to be able to differentiate full cycles, which you never fade, with half cycles, which it's reasonably safe to fade most of the time. As I've said, that gets quite complex, and I need to spread it out and show it to you bar by bar, chart by chart. So we'll have to make that the subject of another webinar. I might even do an extra webinar next week. This is Aussie dollar, US dollar, TO3 buy signal. Again, just to reinforce what I've been saying, have a look at your average true range, work out what your dollar value is, take 50% of it. And if you're taking a trade against the apparent trend, which this bar is right here today, use your discretionary trailing stop, your 50% trailing dollar stop. Teach you more about that when you do a tutorial, but that's an important way to start off protecting your trades. Okay, let's have a look at this one. I think this is the same one. We've done it twice. I've just added in the failure point in this one. 64.96 was the low of the buy signal bar. That's the swing. If that's violated, you're wrong and you need to be short. Okay, pretty dramatic bit of trading in the danger zone. This is a Canadian dollar Japanese yen pair, forex pair. Shows you how a simple TO3 works. This wasn't sort of wrapped up in the fight going on today between these markets, which we'll get to. So it was just a simple TO3 buy signal. Put your order on where the Danielcode trade program suggests you do. Put your protective stop there as well. Easy trading today, $650, pretty well straight up, and didn't do much today, did it? Got an absolute case of don't know what I'm doing. So Don't forget, folks, we're having a special end of financial year plus 1 month sale with 20% off everything. TO3 Signals, fourth seal commentary from Frank DB, which is very important right now. You should be reading that. Success trade signals, members chart, which are the hearts of the Danielcode, and the Danielcode tutorial itself, creating your own Danielcode time signals and creating your own Danielcode price signals. Includes the TO3 and the TO3 plus signals. Now that's available, I said, until the 12th of August, which is in a couple of days' time. We've got some people who've signed up who are ready to start their tutorial, and a couple who are buying one or more of here it is, one or more of our various programs. Go to the tab on the website that says services. Simply click on whichever one you're interested in and follow the prompt. Any problems at all, contact Terry at PayPal. Terry at PayPal. Contact Terry. He's in Canada. That's where our office is, in Canada. He's our IT guy, keeps the website running and does lots of other magic, including the designs for these webinars. And he's a bit of a graphic artist, isn't he? They're very good. I think they're wonderful. So the biggest thing is that you can have 20% off our normal tutorial fee, which is $7,500. So you can save $1,500. If you start your tutorial, as I've said there, you needed to start it before the 12th of August. That's getting very tight now, but if you would email me, jneedham@thedanielcode.com, tell me you want to do the Danielcode tutorial and that you are ready to start next week, I will accept that email as claiming the $1,500 discount, which is very important. And there is no greater gift you can give yourself or that you can give to a member of your family. Once you understand trading, Danielcode trading, that's with you forever. Markets are never going to stop. They're going to go on and on and on forever. That's one of the few things in life you can be absolutely certain of. And if you've learned how to trade, you understand how markets really work as opposed to how the great unwashed think they work, you will make an awful lot of money. I can't do more than try to help you by giving you this $1,500 discount. Email me, jneedham@thedanielcode.com. Tell me you want to do the Danielcode tutorial, claim the reduced fee of $6,000, and I will accept that invitation and you'll be ready to start next week. Okay. This is the battle. This is UST bonds. This battle is whether the market's going to, equities in particular, are going to rally or not. And what you've had here, you've had this battle going on. Fair bit of this chart, you just can't see. It's right hidden under the upper left-hand corner, where you had a very long, month-long consolidation. Then it broke to the downside, and it's been in a battle ever since. And the battle is the bulls, equity bulls, want this market to go up because that means lower interest rates. The Fed is making sure this market goes down because that's the signal for higher interest rates. And this is a battle between the two. And we've been seeing this for a long time. It's great. It's great trading. We had a TO3 and blue line buy signal. It didn't get much legs. Next day was an inside bar, one bar up, a little inside bar up, and we had a TO3 plus sell signal at the low of that red bar, not far from where you actually got into this trade. So it's interesting. It's also profitable. But wherever there's conflict and danger, bars will expand, volatility will expand, and if you know what you're doing, profitability, most importantly, will expand. This is the equity side of it. This is the S&P that really 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars down, gone nowhere. Really hasn't gone far at all. and I think the Russell is even worse. But same thing. The punters want this to rally. The Fed doesn't want it to. And you can see today a typical danger zone trade. Buy signal elected, failed. You finish up with a key reversal bar down. So you buy the high, you should be short by now. Not nice, but not fatal if you know how to trade. This was crude oil for today. The TO3 plus sell signal was elected, but it's feeble. I mean, it's really feeble. It's just a few points below the setup bar low, but we are short and very unconvinced because this is notionally a trade against the apparent trend. So you should be using all of your tools that you would know about when you take a trade against the apparent trend. If you don't know what those rules are, email me and I will be happy to teach you. This is COMEX Gold, which is also in a battle. And it's interesting for you, those of you that don't know, these retracements in the Danielcode are red and a few of them are black. And the black ones are different. They are the 89% retracement, and they are the last level of support or resistance in any trade. And you can see here, we've got a black line at 1949. Yesterday, the market really fought to get down to that. It's got support off the blue line almost exactly. That blue line's so old, it's been on the chart since about June, and still there, still working. And today it's got a little fillip. But guess what's happened? There is a buy signal on today for Friday. But look where that close was. Today's close, after fighting all day, it finished up closing below 1949. That moves the odds massively in favor of the swing being taken out. So it will be interesting to see how this resolves itself. But this ability of the black line to stop markets or to give a signal that they'll go further is quite uncanny. In fact, Akshay is not with us at the moment, so I'll tell that story one day that he's here with us. Very interesting black lines. Be right on it. Here's silver. It's having a fight at the black line. It dived down. It was going for the black line. Of course it was going for the black line. I mean, quite frankly, let me show you how interesting that bar is. So this was Wednesday's bar. Tuesday's bar just held a few ticks off the black line. Wednesday's bar, the low, was 2268. Where's the black line? 2268 and a half. So it breached that number on Wednesday. It did it again today. In both cases, it's then run away and closed above the black line. Okay, so there was a buy signal on silver today, which was elected, and I suggest more to come. Don't forget, part of the battle for gold, and therefore by correlation for silver, is with the US dollar index. That it is locked into its semi-permanent position. It's about 78 to 82% of the time. Gold spends in an inverse relationship with DX, the US dollar index, and that has an effect also on silver through correlations. Okay, so we're getting towards the end, guys. Let me just finally remind you, if you haven't already, if you'd like to do the tutorial and save yourself $1,500, email me today, jneedham@thedanielcode.com. Tell me you want to do the tutorial, you're ready to do it, and you want to claim the discounted fee, save yourself $1,500, and give yourself the gift of knowing how to trade. There's a couple of quotes on here from our friend Greg Palladini, who's a wealth manager in California, and he came back and did his second tutorial with us a year or so recently, and he was kind enough to post under forum everything that he saw and noticed while he was doing the Danielcode tutorial, which was fantastic because the first tutorial, I had taught him about Forex prominently, and when he came to me a couple of years ago to do the tutorial again, he specifically wanted to do it to learn trading time, which is the big banana in the whole thing, and quite fabulous. He came in as I say, as a Forex trader and left as a futures trader, and does a bit of Forex as well, but he trades the futures version of currencies. So email me today, tell me you're ready to start and you want to claim the $1,500 discount. I will accept that if I receive your email before Monday. So don't waste time. Do it right now, folks. When you have got time, I suggest you go to the chart archives of the Danielcode, click on the link, and in there's over 40,000 members charts, all of which I have created for members since the site went public in a long time ago. A long time ago. And every one of those charts, they have 30 days in quarantine, so they're protected for the people who are paying money to see them. And after 30 days, they go straight onto the archive, every single chart. You will learn so much by looking at them. And I think that's about it, folks. Remember that the business of trading futures and Forex is not to be right. The business of trading is making money. And that's why I'm always pointing out to you what these markets do. If you haven't already, go to the website, www.thedanielcode.com, and start your free trial. Just hit the register button. If you have any issues, it's probable that you've had a free trial previously, and the machine doesn't want to let you in again. Just let Terry know, support@thedanielcode.com. He will fix it up for you. Here is our disclaimer for you folks. I suggest that you do read it, and I suggest you pay attention to it, because it is very, very easy to lose money if you don't know what you're doing trading futures or Forex. It is equally a delight to be able to make a great deal of money once you have learned to trade Danielcode. So that's me for today. Thank you very much for being with us. Enjoy your weekend. If there's any particular subject you'd like me to talk about in these webinars, shoot me an email, jneedham@thedanielcode.com, and we'll see if we can get organized to do that. Okay, let me see what we've got here before we here we are. I can answer this via email. Okay, that's for Kevin. We'll talk about that otherwise. Okay, so that's us for today, folks. Once again, thank you for being with us. Do learn Danielcode. Learn how to trade Danielcode. You will be happy and profitable for the rest of your life. Bye-bye for now.